Delay, and this is episode 314 of the Orange Pill Investor. Unfortunately, it is a red day, so we'll see how many options I want to sell today. But when all of the rolling and the check-in and the double check-in is done, I will go over what I think is a legitimate bear case for MicroStrategy. Um, I don't know if the bears just really like to come out and tap dance, or the people who are fair weather bulls just get paranoid and shaken out of their positions when the MNAV drops a bit. But morning stoic. Um, I'll go over what I think is a legit bear case. A lot of it I think is just FUD, and I think on the True North call we do a good job of dispelling FUD. But um, we may have to actually present the rational, reasonable bear cases. Um, and really, they're MicroStrategy is a publicly traded company, and they put all of the risks right there in in all of their public forms. So you can read all of the normal risks. But yeah, I'll go over that. Jeremy, Merry Christmas back to you. And Lolly Lolly Popcorn says Gladiator sold his MSTX. Pump it. Yeah, that's funny. MSTX, I did see someone's suggestion, that's probably in the last call, of maybe like selling puts on it or something. That could be potentially reasonable, but I don't know. Normally I run the wheel when I'm ambivalent about the price of a stock. I don't know, maybe that would work, but I'm not sure I would even want to let myself be assigned shares. I might just sell cash secured puts until the price ran up and then just wait for it to crash again or something. I don't know. I haven't thought about MSTX and MSTU enough to really formulate a strategy with them because I just don't like paying management fees, first of all. And second of all, they have the decay built in. And some people mistakenly call covered call strategies bearish, and they are absolutely not bearish. They are bullish strategies that profit the most when the price of an asset goes up. Now that upside is limited by whatever strike you choose, but it does not profit when the price of a stock goes down. I don't know if I need to repeat myself, but covered call strategies is not bearish because you do not profit when the price of the stock goes down. You will reduce your losses, but unless you're just a genius and you were selling in the money calls because you knew MicroStrategy was going to go down. Okay. I wasn't expecting to see that MicroStrategy was actually up 1% for the week. So that must be okay. They're measuring from last Friday at like 2 a.m. So I guess technically we're up 1.3% from 325. Okay, whatever. I kind of feel like we're down this week. But I think I sold most of my covered calls on Monday. And Monday we had like a short-lived rally. And I'm considering waiting to see if that happens again. Like, this is complete superstition, but I've been kind of wondering if we won't at some point see like a really, really crazy, or it could just be a modest Bitcoin rally over the weekend when the stock market is closed, and then MSTR kind of like gaps up on a Monday or something. So I considered, and like that's not based on math at all. It's just like, I wonder what if this could happen, since Bitcoin trades 24/7 and the market doesn't. it can just as easily Bitcoin can just as easily trade down over the weekend, and then I'd be opening my covered calls on Monday for less than I could have on Friday. So that's kind of a coin flip. But since I'm bullish on Bitcoin and MicroStrategy, just period, over months and years and decade time frame, on average, that could kind of work out. But I don't know if there's any real like meaningful advantage that I could actually capture and be like, oh yeah, I made 5% more on my returns this year because I sold covered calls on Monday instead of Friday. Like, I don't know. It's just kind of like a fun what if thing to think about. But I'm definitely going to have to manage some positions that expire today, and I'll decide how many to open today and how many to, you know, flip a coin and see if maybe we open up um, bigger on Monday. I think there's also, and I don't know if this is statistically proven as well, but sometimes the holidays have poor liquidity because people just take off, so there's not as much capital moving, and maybe people will come back to work on Monday, and it'll be business as usual. Maybe we'll get more volume or something. Yeah, I don't know if that's a real thing either, but I have heard people say, like, yeah, like if there's a holiday on a Thursday, sometimes people take off, or there's just not a lot of money moving around when people take 4-day weekends and stuff like that. So that's just me talking out of my ass. I don't know if any of that has a meaningful effect or not. Let's check the chats before I start rolling. All right, Joe says, "What are your thoughts on selling puts at 280, the gap area?" If I think about it later, maybe I'll come back to that. But I mean, selling puts is going to be profitable, I think, because it's a bullish strategy. So I'm bullish, but I don't know how. Yeah, you're gonna have to explain the gap area to me. I don't know. Is there a bunch of is there a bunch of what? Is that the thing where people post the charts and it's like, oh, there's a bunch of longs at this level and shorts at this level, and if we drop below something, it could go to 280. Um, Real quick. So, kind of bouncing off of 320, 330 is giving me a little bit of hope. But if we crack below 300, it doesn't look like there's anything but air to 250, 225, 250. So, I mean, I've got my fingers crossed. Like, if I was smart enough or prescient enough to just sell all of my leverage when we were at 470, then my account wouldn't have gone down, I don't know, 50, like 40% since then. But it does help to zoom out. My account's still up 4 or 5x from January. But yeah, it still sucks for it to go down half from all-time highs, right? That's never gonna feel good. Um, but yeah, so this has me a little bit nervous. Like, when we were here and it was like higher highs and higher lows to right about here, that felt good. And then right as soon as we went below 350, 360-ish, I was like, "Uh-oh, that's a little scary." If we, if we don't, get some Bitcoin price action, then we could be seeing even even more painful, levels. And that's why I don't really make any price predictions short term. I don't make any price predictions, period, other than just being like, am I bullish or not long term? But we could absolutely see 250 before we see 550 again. So, uh, I'm bullish, but there's no telling what kind of short-term pain the market is looking to inflict upon us. Pork says, "Hi, I'm looking for the MSTR support group." I think you are in the right place. Jeremy says, "Excited for the Bitcoin Standard ETF from Strive. Sounds like a good diversifier." I saw the headlines and I saw everyone sharing it. But they've just filed for it, right? Like I can't search for the ticker yet, right? That's just they're just trying to get approval. If we know what the ticker is gonna be, I'll I will absolutely take a look at it when it comes out. I suspect that it will I don't know. I don't wanna say that it'll underperform. You would think it would have to. It would have to underperform just holding the underlyings because you gotta pay them a management fee. So, I suspect I won't own any of it, but for someone that wants to diversify and be Bitcoin only, I suppose they would be somewhat uncorrelated because MicroStrategy has their business intelligence plus Bitcoin. Semler's got their medical devices plus Bitcoin. Who is it? The cooler people? They've got like, was it batteries? Batteries and Bitcoin, and the miners have mining plus Bitcoin. So maybe that'll be a way for people who are orange pilled to I don't know. I don't know if fooling themselves into feeling like they're diversified is the right word, or just maybe it's a one-stop shop where you can just expose yourself to all of the stocks without having to figure out how much allocation you want to MSTR and how much allocation you want to this. You can just let the ETF do it. I guess that kind of makes sense. Yeah, but I'm always excited for everything new that comes in. I'll absolutely take a look at it once we get some stuff. 94 says, "Good morning, Nithu. Are you down on any calls? I should have sold Coop March and June calls at 500 plus." Yeah, man, when we were at 500 a share, I only picked up a few covered calls. And I think I was still kind of shell shocked from my covered calls getting wrecked back here in March. So like I didn't really just YOLO on the covered calls at 470 because I'm like, well, maybe it goes to 750. And of course it didn't. So um yeah, the short term price action, it's hard not to regret after the fact, but you don't know what's gonna happen. And that's why I tend to try to be a reactive trader as much as possible. Like I have my bull thesis, but I'm kind of just sitting on my hands and waiting for another one of these big spikes and waiting for yeah, see Ivy rank here is only 31. Now the premiums are still going to be very good, but when Ivy rank, this is Tasty Trades platform. When Ivy rank was pegged at 100, I should have just taken that as the signal, the go signal. But I only kind of dipped a toe into it. So I missed out on that. I on a lot of it. Stoic says getting assigned $70 on a cash secured put. Cost basis is at 60 with premium. Here, I can put these comments here. Cost basis is at 60 with premium, but rolled an 85 for a credit. What what stock are we talking about? Did I miss? Stoic, which oh, MSTX. Okay. I should just read. Cost basis is at 60 with premium, so I don't even know what it's trading at. 63. Rolled an 85 for a credit. Okay. Yeah, I mean, I'm bullish on Bitcoin, so I'm bullish on MicroStrategy, and I guess over the next year, I guess that technically means I would be bullish on MSTU and MSTX, but yeah, that's vol on vol on vol. Angry Buddha, what's up? Says you started selling MSTU puts to build out a small swing position. Okay, that 280 gap is staring at us though. KR says, are we consolidating for 6 months like last time? I sure as hell hope not. Adrian's got he's got like a seasonality chart. I got to take a look at that. And I don't know. He's got some historical months that are red and green and whatnot. I don't know if I think some of those have kind of hit, but there's no guarantee that they'll continue to hit forever. But yeah, lots of weird stuff happens at the end of the year too. Some people want to lock in profits, some people want to lock in losses. And then, there's some people maybe pushing taking profits until January 1st so they can pay taxes on it a year from now. So all kinds of weird shit can happen in the market that don't make any sense. Joe says it gapped up on 11.11 and stocks typically come back and fill gaps. Ashish says seems like Bitcoin won't go up before Trump takes office and there's some positive news. Would you agree? Yeah, I don't know. I don't know how much of Trump is already priced in. Like once we knew the results of the election, I think the market kind of settled into that. Like maybe Trump's already priced in. I don't really know. Last comment before I start trading. Angry Buddha says we were hitting more than +5 deviations from the mean when we were up there. Sold my MSTU at 400 and pushed it back to MSTR. Was tempted to pair trade it to Tesla, but didn't pull the trigger. Yeah, I don't want to say I regret exiting all of my Tesla positions, but I am eagerly kind of anticipating when I will start taking some profits in 2025 and getting into Tesla. Like I wanted to pairs trade Tesla and MicroStrategy, but their charts look a little too similar. I mean, I guess the time to do it would have maybe in March because Tesla was still down, and if I'd have taken a bunch of March profits, I could have bought Tesla cheap. I don't know what MicroStrategy was doing in July. I think we were still trading sideways, so maybe pairs trading back into some MicroStrategy here might have made sense. But with MSTR and Tesla both kind of coming down off of all-time highs, like I don't know that it makes sense to trade in or out of either one of them if I'm sitting on those positions. But yeah, I definitely want to take some of my MicroStrategy profits in 2025, and I want to try to sneak them into Tesla before FSD starts really rolling out. But maybe FSD is already priced into Tesla. I don't know. I don't know how forward looking the stock market is. So, all right, I'm going to hide these chats. Let's hide myself. And let's take a look. Make this a little bigger. I sprung for 1080p on the restream. So, I don't know if it looks any better or not, but and let me make sure the volume is down so I don't blow people's eardrums on the fill sounds. There we go. All right, this is the main account. I've got my 25 covered calls that I put on 4 days ago, and I could just let these expire and save myself the 2 cents per contract, But if I want to place new covered calls, I should close these first. So it's not going to cost me much to just pay them off. And so I have about 4,200 delta. So last week at this time, before the price crashed a bit, I think I had 4,700 delta, if I remember correctly. And I still have the 5 covered calls that are at January 31st. These have only been open for a week, so I'm not inclined to do much of anything here. Even though I could buy them back for half of what they cost. Ugh, that is kind of annoying. What's available? Are the February 7th available? Yeah, February 7th is 42 days. So maybe I'll just do that. All right, so let's do a quick roll. And February 7th. Okay, so that's unfortunate. The highest strike that I can even buy is the 470. Kind of don't like. Actually, that's only $30 less than the 500 strikes that I had. So that actually works out. That actually works out. So let's do that. That gives me 2 grand to play with. That's generally the goal when I'm selling 45 DTE calls, is to manage them when they're only worth about half of what I paid for or got paid for them. So was able to roll those out a week, collect a little bit of a credit. Now I reduced my upside, but I kind of want to get wrecked on these because that's going to give me an excuse to just sell these for profit anyway. The whole sole purpose of these in the money leaps is to sell covered calls against. So it's not like my shares that I kind of hold dear to my heart and I don't want to get called away. Each of these each of these calls only costs like what, half of what 100 shares would cost me. So I'm using leverage here, and if I just want speculation, then I'm buying the top of the chain generally. 'Cause this is the cheapest delta I can buy. But when I'm buying in the money calls, it's for a purpose, and that's to sell covered calls against. So as long as I have these 5 in the money leaps, I will have 5 covered call positions on. I won't take these off until I decide to exit this position. So what else do I got? I've still got these January 660, 760 call debit spreads here. If I wanted to close this position, I bet you I can't get jack for it, right? Yeah, 50 bucks a pop. So my intention here is to just win or lose. This is a very small position. It was completely, I've had it for 40 days. So this wasn't like the worst trade in the world to pick up at this time. What, it was about 60 days to expiration. It's the worst time to pick it up in the sense that theta is accelerating. So this was a completely directional play. This actually didn't make any sense as an option seller to purchase this call debit spread. It was completely directional, and had my fingers crossed that we would be over 660 by January 17th. You know, um, the chances that we get there is getting slimmer and slimmer, but closing this now kind of just doesn't make any sense. I'm not recouping much money here. So I'll let that either win or lose, depending on what happens over the next 21 days. I've got a similar situation with these. I got into the hype, like every time they would open up new higher strikes, I would just YOLOing into them, and they were all printing money. But eventually they don't, because you hit resistance and then it comes back down. Uh, so I let myself get a little overexcited with these. I've got 2 of the January 1080s, and again, I've already lost 99% of the value in these, so this doesn't make any sense for me to like, "Oh, I'm gonna roll this out." Like, okay, collect $40 and roll it out to what? Like, what am I gonna buy with $40? Nothing. So, this will probably also die a noble death. These are the 5 cover calls that I just opened. I've still got my 20 April, um, longs. If I sold these, I could collect, I could basically double my money. When MSTR was at like 450 a share, I probably could have 5x'd these. So that would have been smart, maybe to take some profits when Ivy rank was pegged at a frickin' 100. It might have been smart. I think I actually did take some profits in these. I might have had 40 of these, if I remember. Anyway, coulda, woulda, shoulda. But my plan all along was to basically, when these get closer to 90 days to expiration, so in another 21 days, basically around the January expiration date, I will roll these out to 90 days, excuse me, 180 days again. And I'm going to continue to do that all through 2025. Maybe stop doing that in October-ish. April, May, June, July, and then August, September, October. Yeah. So in October, I probably won't roll them out again. October, I will probably cut bait. And if these are up or down, then I will just take my profits or cut my losses. I'm not going to I'm not going to roll out any leverage into 2026. That's the point. So I've already eliminated my margin usage, right? I had like 6 figures of margin and I got rid of that. The next step will be every single rally that we get, just chipping away at my leverage, just selling off some leverage and rotating it into just straight shares. I've got the 800, 900 call debit spreads. So by June, this is a defined risk trade. If we are over 800 or preferably over 900 by June, then these would all be winners. And let's see. He's got to be down right now. I can't remember what I bought them for. I'd have to go back and look. But I'll make a decision on these 3 months early. So I've got what, 80, 95 more days to wait on these, 85 or 95 days to decide what to do here. And then I've also got these speculative 1080s that are down about what, 30%. So if we get a nice rally, my plan is probably, if I can sell these for 6,600, which would be doubling my money, I'll probably sell half of them. That way, the worst I can do is break even, and then we'll see. I'll definitely be rolling these in when they get to under 90 days to expiration. Here's my 5 leaps again. I've got 20 leaps in December, and I've got 3 in January. Doing well on the Decembers, but absolutely getting catastrophically wrecked on the Januaries because I was buying these I don't know if it was close to the all-time high, but you can see that I paid 16 for each of these, and they are down like 2/3 or more. Yeah, these bad boys are down like 12 grand. But not terribly worried, because I've got all of 2025 to sit on these. So, depending on my tax situation, I could sell these 3 and harvest those losses and then just buy them back in January, but or the same thing could be true if I wanted to capture some of these gains this year, I could sell some of the December 2025s. Being that this is my only source of income now, if I wanna apply for loans, like I wanna buy a house, I think I'm gonna have to submit my tax returns instead of a W-2. So for me personally, it might be a little bit different than most people's situations where they wanna avoid paying taxes, but I think I'm gonna have to intentionally take profits to prove that I actually make money. So, that's gonna be an interesting, weird tax strategy is like, "Okay, let me hurry up and take profits so that it actually looks like I make money on paper, and I can prove that I I can prove that I'm a credit worthy, to or that I am credit worthy to lending institutions." Alright, let's take a look at the IRA. Oh, sorry, gotta go back to this one. So I hate having money. So what do I do with 3 grand? I don't know if there's every dip is a buying opportunity as far as I can tell. Now I could just use this as my income, but I think I'm pretty good on bills because I took some profits last week. Oh, no, I forgot to go over, do I want to sell any covered calls this week? And that brings up another kind of good point is that limiting my upside, I think, is underperforming. But what is the biggest risk for my account? Is the biggest risk for me not selling covered calls and seeing this thing go all the way down to 250 and just watching my account's value dwindle, or limiting my upside and just not making as much money if this goes back to 500 in short order? I think it's gonna be a lot more painful for me to watch this go down to 250 and not limit and not kind of mitigate that downside. So let's see what I can get again for next week. I could sell up to like 40 covered calls if I wanted to. And if I did, that would be what, like 40 grand weekly covered calls if I completely limit all of my upside. So I don't know that I want to do that. I don't think I want to limit all of my upside. But let's just take a little bite at the apple, right? If I sell 5 or 10, yeah, I have 5 on. Yeah, if I sell 5 more, then that'll get me to 10 of the 40 covered calls. So I'd be selling about 25%. That doesn't seem too bad. Come on, let's get a fill, please. And it's kind of wild to think about. If I did sell 40 covered calls, that's 40 like 40 grand a week, which would be like 2 million of the for over the next year, even if MicroStrategy trades sideways and doesn't go up. And native option sellers are like, obviously that's what you would do. Like, who gives a shit about upside? But people who are, I think, kind of understand Bitcoin and think that they know what's going to happen with MicroStrategy are like, yeah, why would I just take the 2 million? Like, why wouldn't I just leave unlimited upside and make 2 to 3 times that, potentially? So, I definitely have multiple personality disorder, and the left side of my brain and my right side is kind of arguing back and forth about whether to just take the guaranteed money or not. All right, so I don't need to withdraw this cash and pay any bills just yet. So I am going to either, well, I'm definitely going to buy the dip, but can I afford some leverage? What are my leveraged plays? I'm not going to dollar cost average into this damn January 17th. I need something that's at least 180 days out or close to it. So these are worth, I could buy 4 of these, but I do have a ton of frickin' leverage already. I'm not sure that I need to add more leverage, but each one of these is what? 0.18 delta. Let's add 2 for now. So June 20th, 1080s. Top of the chain. So I'm going to dollar cost average into these a little bit. That's half of my buying power. So maybe I'll put half into leverage and half into straight shares. That seems like a nice uh equivocation and taking a position without actually taking a position. See, 10 shares would cost me 3 grand. So can I get 15 shares? 4,900. Almost. 14 shares. All right. I've got $117. I like that very much. Maybe I'll take a quick look at the chats here. Must be commenting on when I was talking about the 1080. So it says the stream quality is great. Appreciate that. Riverside just wasn't cutting it. I liked their I thought I was going to learn how to use their editing software. Um, but really I was just downloading them and posting them as is with no edits. So appreciate that. Pork says rip. I admittedly have a few of those too. Probably talking about when I was probably talking about when I should have taken profits. All right. Let's take a look at the IRA now. Like I said I was going to do. Yeah. No cash, but let's see if I have anything expiring or needs to be managed. All right, so I've got a December 20. Okay, so this one is expiring today. I must have sold an at the money last week, so let's close that. All right, let's take stock of my positions, pun intended. I've got 530, 630 strike call debit spreads here. These are kind of in jeopardy, and I'm just going to let these win or lose. I've got one 550 strike January 17th. This one is down big, what, like 90%? So I will let this one win or lose. I've also got, holy crap, I must be trading like shit in this IRA. Um, so I paid 4,400 for this one. It's worth 20 bucks. That is a giant loser. And I've got two covered calls. This position could have three covered calls on shit against 300 shares. Plus, I have two leaps, so I could be selling five covered calls in this account. And I've got two of the five set up. I've got one June that I'm not terribly worried about, even though it's down over half, because I've got time to be right on this one. And I've got four of the 530 strike leaps. Technically, even though the delta on each one is only 0.5, since all four of them add up to about, 200 delta, I could sell two more covered calls here. This would probably be considered a ratio spread. So I can sell two covered calls against leaps, three more covered calls against shares, and I can package these all up together. I could probably sell like three covered calls against these if I really wanted to get aggressive. So the next time Ivy rank is up to above 50, I may start doing that. But for now, I'm just going to go ahead and set up another covered call for the week. I'm going to continue with the weeklies at the money until I get wrecked on this. Wait, why is that a debit? I think I was about to buy it. There we go. That's mo better. Again, I can't stand cash. So with my 1,400 bucks, I can, let's see. Is there any leverage I can dollar cost average into? Not really. I could sell some shares and buy some more Junes, but I think I'll just buy some shares. So what can I get? 4? There we go. No cash. I like that. All right. The joint account. I've got almost 400 total delta, so I could probably manage to sell 4 covered calls here if I want. I've got the one at the money that I sold, so let's close it. I've got the one covered call that's been open for a week, but I can already buy it back for less than half of what I sold it for. So I need to roll this out. Let's go to February. Good Lord, it's too small. Top of the chain. Yeah, that's probably not going to fill. So let's try this again. Collect a little bit less. Still doesn't want to fill. There we go. All right, collect a little bit of profit there. Or excuse me, rolled that for a little bit of a credit, I should say. But I've limited my upside to 470 now. So if we rock it back up to 500 a share, I'll get wrecked on this one. That's perfectly fine. Happy with that. Once this April gets under 90 days, I'll start getting a little bit nervous about this one. I could sell it for double. The $1,000 strike. This one's the complete opposite. This one's getting wrecked. I've lost about 80% of the value on this one. I've got almost. I might sell another covered call, and then package that together and dollar cost average into this April. We'll see about that. And again, because I have about 400 total delta almost, I could sell up to 4 covered calls against all of these long positions. So let's sell and at the money for next week. Oops, sorry. Let's do 335 strike. Collected another $1,000 ish. That's going to give me the cash. I can dollar cost average into this April $1,000 strike. So it's, I'm buying this under 180 days, but I've still got 21 days to for something to happen with this. So I'm all right with that. That leaves me $868 to play with. So I can get 2 shares. All right, $200 left. That's all she wrote. All right, my allowance. My allowance is steadily going down. But I also spent a bunch of it. So I've got about 100 delta here. So I could sell one covered call and I have one on. But I do need to manage it. I sold it for 3,000. It's only worth $500. So I need to roll this out. Roll expirations. Let's do February 7th. Again, the highest one that I can find is the 470. So let's do that one. Gotta fill. That gives me $1,200 to play with. So can't quite dollar cost average into this unless I sell my shares. If I sell 2 shares, it's gonna get me 660. That's 1,900 bucks. Nah, that's still not enough. All right, so let me buy 2 shares. No, buy 3 shares. All right, got 280 bucks. That's where I'm gonna have to leave that one. Forrester says, fire with the what's this even called? It's not it's not chef's kiss, is it? Is that the chef's kiss emoji? All right, let's take a look at the 5K account, which I was so proud of myself because it was at like 30. and now it's back to 18. But again, you're doing okay as long as your account is up and to the right. Um, these shenanigans that I was running into back in end of 2023, beginning of 2024, if your whole entire account looks like this, that's a problem. Which is why everyone should probably have a trade journal. All right, so I traded with my son and my dad already this week, so I already rolled 2 of these covered calls to January 3rd. So I'll probably just end up rolling the rest of these to the similar strikes. I could let these expire worthless and not pay the dollar to close them out, but sometimes just for time management, it's nice to just do it all at once. Or I could wait until Monday, let them expire worthless and just come back Monday. That would be fine as well. With the mining stocks, I generally like to build at least 10% call away value. So if I round this to $10 a share, I want to sell, around the 11. My son decided he wanted to pick the 10.5s, which is only 73 cents upside. It's not the end of the world. So, how many do I have? 7, so I can do 6 more, I think. I don't have enough shares. How many do I have? I have 700 shares. Oh, because I only bought back one of the 6. All right, second try. Now I should be able to sell 6 of these. If I can get a fill. That is. Nope. All right, so I gotta walk this down another penny. I'm just gonna put 21 cents in as the bid price. Come on, 5 out of 6 sold. For real? There we go. Thank you. Do the same thing with the riots. These are all just a buck a piece. All right, close those out. Now I have 6 covered calls I can sell for next week. Again, the price is around $11 a share. I think Riot has maybe retained some of its value, or maybe it pumped more because didn't they announce a Bitcoin purchase? So that's kind of bullish for Riot, even though temporarily it's down. But all right, so a dollar worth of callaway value would get me to the $12 strikes ish. So let's remember to sell 6 of them. And of course, I'm probably gonna have to walk this down to 21 cents as well. There we go. I think Robin is actually displaying their margin usage better now, or maybe not. Because last week it told me how much margin I was actually using, but this is saying that I have low margin risk, but not telling me. All right, let's click view details. Okay, so I gave them too much credit. I remember clicking this earlier in the week and it told me exactly how much margin I was using. It was like $500 worth of margin. Oh, maybe it's this number. Maybe I'm not. Why does it tell me margin risk is low if I'm not using any margin? That's a pain in the ass. All right. I got a little bit of a love-hate relationship with Robinhood. So, I got rid of all of my December 27th expirations. Everything else is now out to January 3rd. My son must have gotten some shares called away or something last week because he had like $1,000 of buying power. So we went ahead and added this 9.5 CLSK put for next week. So that's new. This $600 call, I'll probably have to roll this out. I sold it for 1,000-ish and it's worth less than half of that. So let's close it. View all options. I'm going to go out to my approximately 45 days to expiration. And I'm just going to go to the top of the chain and sell it for 1,400. And it doesn't want to fill. So let's walk this down a little bit, maybe to 1,400 even. See if this fills. There we go. Now, this should give me enough buying power to not be using margin, I would assume. So hopefully this is going to say you have margin available. Yeah. So margin is currently enabled. And I'm guessing this $1,000 is how much cash I have before I start dipping into margin. So let's sell another put. Let's do Riot. Because I have a CLSK already, right? So let's trade Riot options. I mean, I could buy some shares of MicroStrategy or whatever, but I'm going to go ahead and use that buying power to generate more cash by selling cash secured puts. See if I can get a fill at 30, the mid price. That worked. Now I should be using dangerously close to margin. See if this resets, or I'm gonna have to refresh. Okay, it did flip to low risk, so it must be. See, again, it's not telling me what my margin use is. Yeah. All right. Fuck you, Robinhood. I appreciate the no cost trades that you provided me when I didn't have a lot of money to trade with, but and I do really like the user interface, but um the other thing is I may add another trading platform. It'll probably be Webull. That one seems to be fairly popular. If anybody's got any suggestions, and it's literally just because the exchanges only insure you up to like $500,000. Um, so anything over that is kind of at risk. So if MicroStrategy goes where many of us think it's going to go over the next year, I may have to just add some accounts. And then stop showing my face online. I might have to go into hiding. All right. Well, I don't see any new comments. Hopefully, hopefully I didn't have technical difficulties. Last time I was like, hey, there's no new comments, but I was like black screen of death for like 10 minutes while I was just running my suck. All right. Any last questions? Last minute questions? We'll hit those up. Otherwise, let me discuss what I think is a legit MicroStrategy bear case. It only took me an hour to get around to it. I think what most of the people complain about is just either FUD or a misunderstanding of MNAV or misunderstanding of Bitcoin. Um, but I was listening to Jeff Booth get interviewed, and he basically was talking about Bitcoin, right? So if you're a Bitcoiner, your base case is like, okay, Bitcoin's going to get me 40% a year. So anything that you're going to take your money and put it into has to be able to compete with 40%. And the way that he described it is the only way that you can beat Bitcoin is one, you either use leverage to get more Bitcoin, and that puts you, if you over leverage yourself and you get liquidated, yes, you are getting better than a Bitcoin return when Bitcoin's going up. But if you get liquidated, then you can get absolutely wrecked on the way down. So if MicroStrategy does the same thing, if they over leverage, and I should be clear, they've been very smart about the amount of leverage that they take on. But if the environment ever gets so crowded or competitive that in order to outcompete the other people entering the space, if they over leveraged, right? I think they're right around 20-25% is their target. But if they ever started to get to 30, 35, 40, 50% leverage or more, even though they technically can't get liquidated because their Bitcoin is actually not the collateral for these loans. I think they're just taking the loans on credit, with not actually putting up any collateral attached to it. There are no strings attached loans as far as I can tell. Um, they if the value of their holdings got to the point where they couldn't support the leverage, then that's a real risk, right? I think they've been smart enough about it, but if I ever noticed like, hey, wait a minute, why are they starting to act almost like, fractional reserve banking, and they're taking on way too much leverage and putting themselves at catastrophic risk, that would be a signal for me. And the other thing, and I guess it's the other part of that, the other way that Jeff Booth described that you can get better than Bitcoin returns is to actually offer value. So companies like, if you come out with a cure for cancer, everybody's, all of the people that say you never sell your Bitcoin, I can absolutely promise you that most of them would crack open their cold storage if they had cancer and shell out their precious sats for the cure. So if you deliver value to humanity, people will pay you Bitcoin for it. I can promise you that. Companies like Tesla, they are disrupting the entire world with energy storage, electric vehicles, full self-driving, Optimus robots. All of that stuff is completely disruptive and a net benefit to humanity. So I think you could probably get better than Bitcoin returns with something like a Tesla. So that leads to MicroStrategy. They cannot just provide leverage. That can't be the only reason that you're buying MicroStrategy. It can't just be because it's a leveraged MicroStrategy play. Otherwise, you could just get MSTX or MSTU, which arguably they're still going to be better than 2x ETFs because the 2x ETFs have decay and management fees. MicroStrategy is not, but I mean, you still have to pay people in the company, so you could call that a management fee. Like, they still have to pay their employees a salary and give them stock options and all of that good shit. So The overlooked thing, and it's not overlooked by everyone because Jeff, he actually loves the business intelligence side of MicroStrategy. But some people say, just sell it, just sell that part of the business because it's a drag on their MicroStrategy convertible bonds. And I would argue the opposite is true. The absolute bear case, in my opinion, is if MicroStrategy's business intelligence software can never turn a profit, or if they absolute just sold it. Now they could morph into something else, like maybe something, new, uh, but they have to deliver something of value, and it's in keeping with what Saylor talks about when he says you gotta upgrade the world. So if MicroStrategy can upgrade the world with their business intelligence software side, then they will be entitled to venture type returns on top of their venture type asset that they already hold. If they fail to do that, then they will fail. So mark it down right now. If their business intelligence side of the house in 5 or 10 years does not become profitable, I think that's a problem. Um, Now I'm kind of bullish on it because some people will say, well, they've had negative EPS on their business side of the house for tons and tons of years. Microsoft's eating their lunch, blah blah blah. However, they are eating Microsoft's lunch. They're eating the whole entire Mag 7's lunch right now. So if you are the best of the best, talent in the world, who do you want to work for? Do you want to work for these dynasty Mag 7 companies or MicroStrategy? I think just like Tesla is kind of like the number one place that engineers want to work. I think over the next 5 or 10 years, all of the best business intelligence software people will probably want to work for MicroStrategy. The the challenges that they will be able to solve and the stock options that they will be able to reward their employees with will be second to none. Um, so yeah, that's my bear case. If MSTR just becomes leverage with no business case, to me, that's the greatest threat to long-term survival. And yeah, I think I think having as much Bitcoin as they have on the books is a huge advantage. So I'm bullish on that side, but I will be watching. If they can't make if they can't earn a living and provide value outside of just Bitcoin leverage, then not gonna make it. But anyway, I think that's a legit bear case. Um, and it's something that I thought about while listening to Jeff Booth. And if you can't have at least somewhat of a meaningful thought listening to him talk, then you might already be brain dead. Um, and probably half of what I said is just me regurgitating his ideas. But yeah, that's my bear case. If they can't get their BI software cooking or provide some kind of value outside of just MSTR leverage, um, then eventually they won't be able to continue to command an MNAV premium. Especially and it might take 10, 20, 30, 40, 50 years for that to happen. So my bear case might take decades to come to pass. I'm definitely not worried about him in 2025. That's for sure. Um, but there was one guy that I listened to, and he maybe I'll cover it in a video, but he was talking about MSTR, and he's like, "Oh, it's just a pyramid," and I think he's a PhD of something. And I thought, you know what? For someone who's not a Bitcoiner, it was very convincing. But I listened to a few more of his videos talking about Bitcoin, and he's clearly a fucking Keynesian uh, fiat money whore. Uh, so if you're sufficiently orange pilled, then you can listen to his crap all day long, and you see the obvious holes. But someone who wasn't a Bitcoiner, I could see easily just swallowing all of that hook, line, and sinker. But um, all right, I think that's all I got for now. Let's just check the chats real quick. Hayden says, I missed it. Do you have a legit bear case? You're gonna have to fast forward to uh, I'll re-upload it, or you can just scroll to 1 hour. That's when I started talking about it. Yeah, so UJ5K just says I've been talking about it. Yeah. So I think it was probably 1 hour. 1 hour in. Yeah, so that took about 10 minutes for me to run my mouth. Feel free to disagree or put your own bear cases out there. And if anybody's got a decent bear case, maybe I'll cover it. But I am going to try to inject some bear case discussion into the True North calls. We'll probably pick up again in January. It's fun to make fun of it's fun to make fun of the bears, but I think most of their arguments are so dumb that we have to come up with the better ones. So maybe mine was not very good either, and maybe some of the guys will be able to poke holes in it. But that's the best I could come up with. So I think that's it for now. Be good, y'all.